guys. Welcome to my report here. And as you can see here, we got a light day today in terms of economic data. There's nothing to report. This week will be rather light. We just got a few items like CPI and initial jobless claims are probably the two biggest ones we'll see this week. But again, this week will be rather light in terms of what's going to be reported out there. So let's jump to the headline news because that's what's going to affect the markets. Stocks are up again this today. It's continuing the trend that we saw last week. A lot of it has to do with we got some bad news last week in terms of the jobs data. So what does that mean? Bad news is good news. Stimulus, that's been up in the air with Congress, and it looks like the Democrats are going to be able to get this through without any Republican support. So they're thinking with the bad jobs numbers that this may help to stimulate or get more of this package together, that this might be a bigger push for bigger dollar amounts of stimulus to get things out there. So with that in mind, stocks are kind of taking off a bit on that as well. And looks like they're inching closer to some type of agreement to get some type of stimulus package out. Now, it's not what I think a lot of people initially thought. A lot of people thought they're going to send out $2,000, keep to the same range, about up to was it 75,000 per person, income-wise, and it looks like now it might be revised lower, down to about people who are making 50,000 or less, and also 1,400. So again, it looks like it's going to be different what they initially said they were going to, as well as different what even what the package initially says, as it's going to have to be revised a little bit. To get insurance passage through Congress. So, in any case, let's see how this is playing out in the bond market. And bond market is at even. As you can see, this is where we left off on Friday. We did start the morning off lower. However, we did come up a little bit. Now we're about even, and we have been kind of ranging in between this level and probably a -5. What does that mean? This is about the time when lenders come out with the pricing, and basically we will probably be unchanged in our pricing. Our pricing should look about what we saw on Friday, so there shouldn't be much difference there. Yields, we've been testing this level here. We're up about 1.17 earlier. We've come slightly down a little bit, down to about 1.158, just under 1.16 in this range. So as you can see, we did start the range much lower below this technical level, shot right up, and then we've kind of subsided slightly. But again, yields are going through a big push right now. A lot of it has to do with the stimulus because anytime you add more debt, it creates inflationary pressures on there, and that's the biggest enemy for mortgage-backed securities and yield treasuries here. All right, so that's pretty much the wrap for the day. Mortgage rates unchanged from Friday's pricing, what we saw. I hope you guys had a great weekend, and if you guys got any questions about anything I can help you guys out with, a little bit of background about myself. I am a loan officer, so I'll be more answer any questions, what my thoughts are on mortgage rates, or if you have questions on mortgage rates, if you got questions on the process, if you guys are looking to go out to buy, I'd be more than happy to help you guys out in that, get yourself pre-approved so you can make that offer and finance that property, as well as any refinance opportunities. If you guys are looking to refinance, want some second opinion or anything, I'd be more than happy to look at those as well. You guys have a great rest of your day. Thanks so much for watching, and I'll look forward to see you guys in tomorrow's video. Bye-bye.